Welcome back to Investing Talk Podcast. Today we're zooming in on Arcutis Biotherapeutics, ARQT. You showed some interesting information covering the recent stock performance, a bit of technical analysis, and an overview of the company. Our goal is to really understand what this all means for you.
It's definitely a compelling situation unfolding with Arcutis. There are several key elements to consider here.
Let's jump right into the recent action around the stock. It saw a significant jump, 10.81%, closing at $16.60. What were the driving forces behind this, upward move? Our sources highlight a few important areas.
It appears, a confluence of factors contributed to that price increase.
Okay, first off, Arcutis successfully completed a public offering,
Right.
bringing in roughly $172.5 million. This influx of capital likely has a specific purpose, right?
Absolutely. That capital infusion provides them with significant flexibility to advance their initiatives. It signals to the market their readiness to execute their strategic goals. For you, it's worth considering what those goals might be and how this funding supports them.
And what exactly are those initiatives? Arcutis is a biopharmaceutical company with a focus on developing treatments for immune-mediated skin conditions. Their main product currently is ZORYVE, which is a topical cream used for plaque psoriasis and atopic dermatitis.
Right. ZORYVE.
They also have other treatments in their pipeline, including ARQ-154 for scalp and body psoriasis and seborrheic dermatitis, as well as ARQ-255 for alopecia areata and ARQ-252 targeting chronic hand eczema and vitiligo. Quite a mouthful.
They've definitely carved out a specific niche within dermatology, focusing on conditions where, patient needs haven't been fully met. ZORVE being available and generating revenue gives them a foundation to expand from.
Yeah.
It's interesting to note the breadth of their pipeline, targeting several distinct dermatological conditions.
Adding to the positive news, the FDA accepted Arcutis' supplemental application for ZORYVE. This acceptance could pave the way for the treatment to be approved for even more uses, potentially, significantly increasing their market reach.
That's a noteworthy development. When the FDA accepts a supplemental application, it indicates they see merit in exploring expanded uses for an already approved therapy. For Arcutis, this could translate to reaching a much larger patient population down the line, potentially.
Looking at their financials, the company reported revenue of $196.54 million for 2024, which is a considerable increase compared to the previous year. They've also recently exceeded earnings expectations, which is always a good sign.
That revenue growth definitely suggests that their marketed product, ZORYVE, is gaining traction. And when a company surpasses earnings expectations, it often boosts investor confidence, signaling, positive momentum in the business.
Finally, there's been some speculation in the market about a potential acquisition of Arcutis. This kind of chatter can sometimes lead to a bump in the stock price as investors anticipate a potential premium.
True. While not a fundamental driver of the company's value, takeover speculation can certainly introduce volatility and potentially push the stock price higher in the short term as investors, try to anticipate a deal.
Now, let's turn our attention to what the technical analysis suggests about this recent price surge. The significant increase indicates strong buying interest. Although specific trading volume data wasn't provided in what you sent, typically, a price increase of this magnitude is supported by higher than average trading activity.
Generally, that's a good sign, yeah. Increased volume accompanying a price jump can lend more weight to the move, suggesting broader market conviction rather than just, isolated trades influencing the price.
We don't have the 50-day and 200-day moving averages here, which would give us a clearer picture of the trend. However, the report notes that if a stock is trading above these averages, it often suggests a bullish trend, meaning sustained upward price movement.
Exactly. Those moving averages are indeed valuable for understanding both the short-term and longer-term price momentum. Sustained trading above them often reinforces a positive outlook.
Similarly, the Relative Strength Index, or RSI, isn't available, but it's worth knowing that an RSI reading above 70 can indicate that a stock might be overbought, potentially suggesting a likelihood of a price pullback.
And you're right about the RSI. A high rating doesn't guarantee a price drop, but it does suggest the stock has experienced a rapid increase and might, consolidate or slightly decline in the near term. Caution flag, maybe?
Given all of this, the technical analysis offers a hold recommendation for now. It acknowledges the recent positive movement, but also flags those potential overbought conditions.
Makes sense.
The analysis suggests considering a buy if the stock dips to a level of support and the RSI indicates oversold conditions, meaning it might be undervalued in the short term. Conversely, it suggests a sell if there are signs of the upward trend reversing or if the RSI remains high for an extended period. It's important for you to remember that this is based on the information we have and isn't personalized investment advice.
That's a prudent assessment given the data we have. Waiting for a potential retracement to a support level, especially if the RSI suggests oversold conditions, could offer a more favorable entry point for investors. Conversely, if the upward momentum appears to be faltering or the overbought conditions persist, well, caution would be warranted.
Zooming out to get a broader picture of the company, Arcutis operates within the biotech and pharmaceutical sector, as we mentioned, focusing on dermatology with significant unmet needs. Over the past year, the stock has traded in a wide range, from $6.99 all the way up to $17.75.
That significant price range over the past year really underscores the inherent volatility often seen in biotech stocks, doesn't it? Positive developments, especially in clinical trials or regulatory approvals, can drive substantial upward movement, while setbacks can lead to pretty sharp declines.
Financially, while that $196.54 million revenue figure for 2024 shows impressive growth, Arcutis did report a net loss of $140.04 million, with an earnings per share of -116.
Yep, that loss is key.
They do have a considerable amount of cash and short-term investments, around $228 million, but they also carry long-term debt of approximately $107.2 million.
It's not uncommon for growing biotech companies like this to prioritize investment in R&D and market expansion, which can result in net losses even with rising revenues. Their cash reserves are important for funding ongoing activities, obviously, and the level of debt is something to monitor to ensure it remains manageable relative to their assets and future earnings potential.
So pulling it all together, what are the key things for you to take away here? One potential concern is those ongoing net losses, despite the strong revenue growth. The debt, while maybe not alarming, is something to keep an eye on.
Definitely.
On the positive side, Arcutis has an interesting pipeline of novel treatments and has demonstrated significant revenue growth.
You've highlighted the crucial points there. The central question for investors is whether their current revenue growth trajectory will eventually lead to profitability and whether their pipeline products will successfully contribute to future revenue streams. That's the gamble, really.
Market sentiment around Arcutis seems generally positive, with a strong buy consensus from analysts and an average price target of $18.80. Online discussions also reflect a degree of optimism, although some investors are understandably cautious about the reported losses.
Analyst ratings and broader market sentiment can provide insights into expectations, but it's important to remember that these aren't guarantees of future performance. The price target suggests analysts see further upside potential, but the concerns regarding profitability are definitely valid points for investors to consider.
When we look at their competition, Arcutis is in a space with larger, more established players like Valent Pharmaceuticals, now part of Bausch Health, and Eli Lilly. While these larger companies have a wider array of products, Arcutis' focused approach on innovative dermatology treatments could give them an advantage in specific areas. For you, it raises the question of how well Arcutis can compete and capture market share against these giants.
Competing with established pharmaceutical companies is a significant undertaking, no doubt. However, Arcutis' specialization in dermatology and their focus on novel treatments for unmet needs could allow them to differentiate themselves and potentially gain a competitive edge in specific market segments. It's about execution.
Looking ahead, upcoming earnings reports and the progress of their pipeline products, particularly ARQ-255, will be significant catalysts to watch. Potential risks include, well, regulatory hurdles in getting their pipeline products approved, and the ever-present threat of increased competition in the dermatology space.
Those are the key milestones and potential challenges to monitor, absolutely. Positive outcomes in their clinical trials and successful navigation of the regulatory process for their pipeline drugs could be major drivers for the stock. Conversely, setbacks in these areas or intensified competition could pose significant headwinds.
The overall recommendation from this broader perspective seems to lean towards a buy for investors who are comfortable with a certain level of risk, especially those with a long-term investment horizon. This is based on the perceived undervaluation and the positive sentiment from analysts.
Right, for the risk tolerant.
However, a hold might be a more prudent approach for more conservative investors until the company demonstrates a clearer path to profitability.
That reflects the nuanced picture we're seeing. For investors with a higher risk tolerance and a longer investment time frame, the growth potential offered by their pipeline and revenue trends might be appealing. More risk-averse investors, however, may prefer to see more tangible evidence of profitability before committing capital. Makes sense.
So to bring it all together for you, the recent increase in Arcutis' stock price appears to be driven by successful fundraising, promising advancements with their lead product, ZORYVE, and encouraging financial performance in terms of revenue growth.
A good combination of factors.
While technical indicators suggest some caution in the short term, the company's innovative pipeline and revenue trajectory present an interesting long-term opportunity. The critical factors for you to monitor will be their progress in achieving profitability and the advancement of their other treatments through the development process.
The interplay between their scientific advancements, the pipeline, and the financial realities of operating in the biotech industry will be absolutely crucial to observe as an investor.
Consider this. Arcutis' targeted approach to addressing specific unmet needs in dermatology could give them a unique position in the market. However, successfully navigating the journey to profitability in the biotech sector is often complex, rarely straightforward. What do you think are the most important priorities they need to focus on to translate that revenue growth into actual net profit?
While effectively managing their research and development expenditures while maximizing the market uptake of ZORVDE and successfully launching their other pipeline products that will be paramount. Striking that balance between investing in future growth and demonstrating a clear path to profitability is a significant challenge they will need to navigate successfully. It's the classic biotech tightrope walk.
Thanks for joining us for this analysis of Arcutis Biotherapeutics. If you found this helpful, please subscribe, like, and leave a comment with any other companies or topics you'd like us to explore in future discussions.